with its yield of 7.49%. Not only is it higher than the returns you would get from EPF, a 5-year fixed deposit, and also a 10-year bond, but it also, when compared to most of its peers, KIP REIT is one of the highest. Next slide, please. Also, KIP REIT possesses a strong and healthy balance sheet. As at 30th September, its total assets increased from 779 million to 944.8 million. This is due to the increased cash and cash equivalents on the back of unutilized private placements proceeds. Total liabilities were relatively unchanged at 332.8 million, and its gearing ratio declined from 35.2% to 32.9%, while its NAV per unit stood at 1 ringgit and 6 cents. Next slide, please. Moving on to KIP's debt profile. 68% of its debt are based on fixed rate borrowing, while the remaining 32% are based on floating rates. And you can see that the weighted average interest cost stood at 4.46%, which was up slightly from 4.31% in the previous corresponding quarter. And looking at their debt maturity profile, KIP has about 210 million worth of rated medium-term notes and 100 million unrated medium-term notes that are to be matured by 2024. Okay, moving on to the portfolio updates. So I'll just give you the key highlights. So KIP's portfolio of properties has a total valuation of 852 million, a net lettable area of 1.49 million square feet, 785 tenancies, and an average occupancy rate of 90.1%. Next slide, please. I will go through now the breakdown of the average occupancy rates. So you can see that almost all of KIP malls have an occupancy rate of above 80%, barring the exception of KIP Mall Bangi at 72.3%. However, it is showing strong signs of recovery with its new anchor tenants, namely My Hero Supermarket and Moko, which occupies 19.4% of its net lettable area. So you can see that the occupancy rate for their properties are actually still very strong. Next slide, please. Okay, so from here you can see that the majority of KIP leases are expiring within 2023 and 2024, and the weighted average lease expiry stands at 2.61 years by occupied net lettable area and 2.19 years by gross rental income. Okay, so now we go to the acquisitions. So as you may know, earlier in the month, the unit holders have approved the proposed acquisition of the 3 industrial properties, which amounts to 78.7 million from Hexstar Chemicals, Hexstar Industrial Chemicals, and Teju Logistics. All 3 properties are fully occupied and have a property yield of 6.5%. And they are all in Klang area. So so I'll go to the rationale of this acquisition. So these 3 properties were picked mainly due to their strategic location within the Klang Valley, being easily accessible to major highways, and they support industries within the Pulau Indah Industrial Park. These acquisitions also allow KIP for the portfolio diversification into industrial properties, and also strengthens its overall portfolio. And with the 15-year lease tenure for the 3 properties, this will ensure a stable stream of recurring income and cash flow for KIP REIT. Next slide, please. Now I'll go through the outlook and their strategies moving forward. So in terms of the outlook, KIP REIT continues to be cautiously optimistic of its prospects, as there remains uncertainties in the overall market due to macroeconomic issues and as well as inflationary pressures. Having said that, Retail Group Malaysia had forecasted the retail industry in Malaysia to grow by 31.7% in 2022, and footfall across shopping malls have visibly picked up since the easing of COVID-19 restrictions. So this bodes well with KIP's prospects going forward. And in the overall economy, Bank Negara Malaysia had projected a GDP growth to be within 5.3 to 6% in 2022, backed by an increase in private consumption and business activities coming out of the pandemic. And for 2023, the Ministry of Finance had forecasted a GDP growth between 4 to 5%. Now, moving forward, KIP had recently completed its private placement exercise to raise 59.9 million of proceeds, which is to part finance the 3 acquisitions as well as the KIP Mall Bangi facelift. And moving forward, they will continue to actively explore further opportunities in the industrial property space as they foresee the demand for commercial properties, which includes industrial facilities, logistic facilities, and warehouse facilities to remain strong for the foreseeable future. In regard to its operational measures, it will remain vigilant and prudent on managing cash flow and exercising financial discipline to continue delivering value to its unit holders. So this concludes the presentation today, and now we shall proceed to the Q&A session. During the Q&A session, you may enter your questions in the chat box and I will read it out, or you may raise your hand and we will unmute you for you to ask your questions. But if you would like to ask verbally, please state your name and the institution that you're representing. Thank you. Okay, since there are no questions yet, maybe I can kick off the Q&A. So is your gearing at this level, is this more comfortable? Or what's your target gearing level going forward?
Okay, I'll take this question. We are actually very comfortable with our gearing level at about 35%, which is way lower than our the allowed REIT guideline of 60%. So at this juncture, 35.2% is our comfortable level. Yeah, I think there's a question from Isaac. Kelvin.
Yep, Isaac, you can unmute yourself and ask the question.
Hi, good morning. This is Isaac from Affin Huang. I have 2 questions, please. Number 1 is that can you just share with us some of the things more about the KIP Mall in Bangi? So what's the plan to improve the occupancies and what's being done there and what should we expect in the quarters ahead? And also maybe on the same note, maybe you can share, like we see a strong recovery in occupancy rates in the other malls. So how's the revenue rental per square feet doing in those malls? And what have you done actually to achieve what you have achieved in terms of the recovery and occupancy rate? So that's question number 1. Question number 2 is that if I were to look at your new acquisitions, the gross yield is about 6.5%. But for those units that have issued to part finance them, the implied yield I think is higher than about 7.9% as per your current distribution. So on a net basis, it's slightly dilutive on the DPU sense. Can you just help me to get around with that? Like, is the deal in our view is slightly dilutive to the earnings? So how should we perceive that? And especially if you are planning to acquire more property in the quarters ahead. Thank you.
Thank you, Isaac. I'll take the first question first. So basically, we were mentioning that, what do you expect? What will you be expecting in the upcoming quarters? As we've mentioned that we are expecting quite a good recovery in terms of footfall, as well as basically you are seeing quite a lot of these business operators in expansion mode. So we are quite happy about that. Going back to KIP Mall Bangi, we are still going through the renovation AEI process. It's actually under renovation right now. And we have we will be doing it in stages because we don't want the renovation to be affecting the existing tenant now. We are also very happy to announce that Hero and Hero Supermarket and Noco, who our anchor tenant, has already opened in full force. And we are also seeing quite a lot of F&B operators inquiries, and we're happy to announce that there has been quite a number of renowned F&B which has already been secured. Some that I can mention is such as Gigi Coffee. As you know, Gigi Coffee is one of the trendiest cafe in the market right now, and we have also secured Ayam Penyet, Best, and Secret Recipe, etc. So we're seeing quite a lot of inquiry in the F&B area in the space. We have also seen quite a number of home improvement sector interest, and for KIP Mall Bangi specifically, we have also closed a deal with Happy Homes, which is selling all the home improvement products, and also, like, for example, they're also selling like a lot of like the Tupperwares, etc. And they are taking about 10,000 square feet in KIP Mall Bangi. And it will also spill across to the rest of the mall as well. So basically, for KIP Mall Malacca, you'll be seeing JJJ taking up about 20,000 square feet on the second floor. So you'll be expecting, we will see the opening on the November 4th. For question number 2, Wei Bin, can you share the details, please?
Yeah, sure. Okay, I said, so on the questions on the dilution, I think we have stated in the circular that with the private placement, we will see the immediate dilution at the moment, but subsequently, the first terms of the proposed acquisition, which is at 6.5%, but subsequently, I think for every renewals, we can see that there will be a 13% or 12% rental reversions. So with that, there will be a yield accretive subsequently, everything being equal.
Okay, thanks. We have a question from Joseph. He is asking, will you review the upward rental rate in 2023?
Sorry, Kelvin, before we move on to the next question, I think Isaac has more query.
Okay.
It's the same as the rental reversion. It's the same question.
Oh, okay. Okay, yeah, he was asking, Joseph is asking, will you review the upward rental reversion in 2023 when the lease is renewing? And
okay,
what quantum?
Yeah, I think this question is a question that often asked. So basically, for the first quarter, from July to September, our average renewal rate is about the rental renewal rate is about 6.12%. Sorry, the increment of it, and we are seeing quite a huge increment from. Hold on a second. From Kota Tinggi as well as Malacca. KIP Mall Malacca is standing at about 9%, which is quite good, I would say. And so that this is for the rental renewal rate. The rental rate, sorry. Yeah.
Okay. Any more questions?
If there's no questions, maybe I can just allow me to ask one more. So going forward, is there any target size in terms of your future acquisition when it comes to maybe the industrial or manufacturing or warehouse? What should we expect? Should we expect this to be an annual thing, or it's on and off? How should we see? Like if I have to look at Axis REIT, they're almost every week, they are constantly acquiring. And under REITs, they are a bit quieter. So where would the KIP REIT going in terms of these acquisitions, the pace of the acquisition?
Okay, thank you, Isaac. We are aggressively looking for more asset for acquisition. We have a few potential assets under review right now. Some of them are in the industrial, some of them are industrial asset and some of them are retail. At this moment, we cannot share further until we have reviewed all of them in thoroughly. Yeah.
Okay, thank you.
Okay, we have a question from Wendy. She's asking if we can share an update on the private placement. Are there any more takers since Bursa had granted an extension to February?
Wei Bing, maybe you can share on this question.
Wendy, so far I think we do not have any update yet, but since we have the extension until February, we will update everyone's closer to the date.
Thank you, Wei Bing. Valerie, maybe you can share a bit more on like your personal outlook on the retail sector going forward. Like how do you see it going forward?
I think this is my personal view. In the next 1 to 2 quarters, we are seeing I'm expecting it to be quite positive with all the festivals coming. At the same time, of course, with the footfall recovery and also the expansion plan from generally the retailer as a whole. And of course, we don't know what will happen in the next 1 to 2 quarters, but for us, because we are community-centric neighborhood malls, where majority of our tenants selling necessity goods, it will be quite stable at this juncture. But generally, we are quite hopeful in the next couple of quarters. Yeah.
Questions from the crowd? Okay, another question from Wendy. So is the target of growing KIP REIT's portfolio value to 1.5 billion ringgit by FY26? Is it still intact? And can you share more on the strategies to achieve this?
Okay, I'll take this question. Yes, we are still targeting this portfolio value of 1.5 billion. I think we have 2 to 3 years to go, and we have quite a lot of assets actually under our review right now. And some of the assets which is under first right refusal are also in the planning. And yeah. So we are still charging towards this 1.5 billion target.
And going forward, will you be looking more at the retail side or industrial property?
I think it really depends because for a lot of the industrial properties that are available right now, the yield is generally below our criteria. So for us to look for assets which will meet all our criteria is not as easy as just acquiring a warehouse or industrial properties. As for retail, again, because our so-called business is more community-centric neighborhood format. It is also not an easy asset to find generally. And it also takes time to build and to mature organically anyway. So we will be aggressively looking at both of this segment at the same time.
And are you able to share the value of the ROFR assets
Unfortunately, not at this juncture. We will still have to wait for, I mean, in terms of the value, it is, I mean, good news is the market is getting better. Obviously, then the valuation will be slightly better also with the rental revision as well as the occupancy rate. So as and when it's ready, we will share more about it.
Maybe we can take a couple of questions more before we conclude this session. Valerie, maybe you can share with us for KIP Bangi. Who else are you, what other tenants are you targeting to secure, to boost up the occupancy rate? You know, because that's the only mall that is below 80%. So
okay, so for KIP Bangi, I would say that we are one of the leading malls over there. And as you know, the AI in state of openings. We are seeing again a lot of the FM. Can you hear me? Hello?
yeah, so actually it was cracking at the beginning.
Sorry, hi.
Maybe
Can you hear me now?
Yeah.
Yeah.
We can hear you now.
Okay, all right, sorry about that. We are seeing quite a lot of the F&B operators perspective looking at the ground floor, and we are also seeing a lot of the promotional lot going into fixed lot, so we are very happy about that. But generally, we are focusing in F&B as well as generally F&B, I would say, and some home improvement space.
Okay.
Yeah.
And for FY23, how much would you be allocating for maintenance capex?
Wei Bin, can you share the numbers, please?
Sorry, Kevin, your question again.
For FY23, how much will you be allocating towards maintenance capex?
There is no fixed additional capex that we allocate based on the approved budget. But I think as we have reported in our annual report, the major facelift will be Bangi, which we have 18.1 million, which is committed.
Okay. Thank you. Okay, if there are no more questions, I think we can end the session here. So maybe I'll just wait for one more minute if there are any more questions.
And if there's any question at any later stage, you can always email to Calvin or myself or our team, and we will reply accordingly.
Yep. Okay, seems to have no more questions. So I think before we end, Valerie, do you have anything you want to tell the crowd before we end the session?
Nothing much, but we do appreciate your time for getting an update from the team. We look forward to seeing you in the next quarter.
Okay, and with that, I shall conclude the Q&A session. Thank you everyone for tuning in, and stay safe. Goodbye.
Thank you, everyone.
Thank you very much. Thank you, everyone.